Happy Wednesday, everybody. Welcome to another episode of Market Update, where we discuss leading financial and economic developments in Europe, Asia, and North America. My name is Tony. Let's jump in. And first up, US technology stocks tumbled on yesterday, after fresh warnings that the hype surrounding artificial intelligence may be overblown, rattling some of the year's strongest performers. Nvidia, which last month became the world's first $4 trillion company thanks to investor enthusiasm over its dominance in AI chips, slid 3.5%. Other AI-linked names suffered steeper falls, with software specialist Palantir down 9.4% and chip designer ARM off 5%. The declines dragged the technology-heavy Nasdaq Composite 1.4% lower, its sharpest one-day fall since the beginning of the month. The benchmark S&P 500 slipped 0.7%, though losses were concentrated in high-flying technology shares. The selling quickly spilled over into Asian markets, with Japan's Nikkei 225 opening down 1.3% and South Korea's Kospi falling 1.8%. Traders linked the downturn to a report published on Monday by a branch of the Massachusetts Institute of Technology, MIT. The research concluded that, quote, 95% of organizations are getting zero return, end quote, from investments of generative AI, despite the technology being touted as transformative for productivity and profits. Quote, just 5% of integrated AI pilots are extracting millions in value, while the vast majority remain stuck with no measurable profit and loss impact, end quote, the MIT authors wrote. One trader at a large US technology fund stated, quote, the story is spooking people. End quote. The cautionary findings added to concerns voiced by OpenAI chief executive Sam Altman late last week. Quote, are investors overexcited? My opinion is yes, end quote, he said, warning that while AI would create long-term societal value, some investors were likely to lose substantial sums during periods of, quote, irrational exuberance. End quote. The retreat also spilled into cryptocurrencies, with Bitcoin losing 2.7% and crypto-linked stocks declining too. Quote, the market has been on fire, and today you saw a rotation out of a lot of the very hot ones, high momentum names, end quote, said Jacob Sonnenberg, portfolio manager at Irving's Investors. The sell-off echoed a brief wobble in January, when Chinese AI group DeepSeek claimed to have achieved breakthroughs with far less computing power than US rivals. Though markets recovered quickly, the episode showed how sensitive investors remain to any hint of waning AI dominance or softer demand for chips. Defensive sectors benefited from yesterday's turbulence. Utilities, consumer staples, and real estate stocks advanced, leaving roughly 70% of S&P 500 companies higher on the day, even as the AI trade faltered. Despite the setback, AI-linked firms remain central to recent market gains. The S&P 500 Information Technology Sub-Index has risen 14% since mid-May, led by many of the same names hit hardest in this latest reversal. Next up, we move across the Atlantic to Europe. Spain and Portugal are battling some of the most destructive wildfires in nearly 2 decades, with blazes consuming land on a scale not seen since 2006. In Spain, wildfires have already scorched an area twice the size of London, prompting the Prime Minister, Pedro Sanchez, to announce disaster declarations for the highest-hit regions once the flames are brought under control. The fires, fueled by Europe's third longest recorded heatwave, have spread across the northwestern provinces. More than 31,000 people have been forced to evacuate in recent days, while at least 4 people have died. Transport links, including the Galicia-Madrid rail line and stretches of the Camino de Santiago pilgrim route, were shut as flames advanced. Spain has deployed more than 2,000 troops alongside firefighters, while calling on international reinforcements for the first time after its own resources were overwhelmed. German crews joined teams from several other EU countries, marking the largest wave of international firefighting assistance in Spain's history. Quote, let us not be overconfident. There are still difficult hours, end quote, Sanchez warned, as he faced criticism from residents in Zamora who accused the government of responding too slowly. Across the Iberian Peninsula, Portugal is also enduring its worst wildfire season since 2006, with 2,162 square kilometres burned so far. The Prime Minister, who was under fire, no pun intended, for what opponents call a sluggish response, pledged support for devastated areas and urged unity. Quote, we are at war and we must win this war, end quote, he said. Nearly 1,500 firefighters remain deployed against major blazes, including one near Trancoso that has raged for more than a week. and may become the country's largest on record. Some commentators argue that the scale of destruction across Europe showcases how climate change is reshaping the continent's summers. According to the Copernicus European Forest Fire Information System, wildfires have burned around 8,948 square kilometres of EU land this year, the most since at least 2006. Scientists warn that hotter, drier conditions combined with strong winds are making Europe's fire seasons longer, more intense, and increasingly deadly. While cooler weather is forecast to bring some relief to Spain and Portugal, forecasters caution that half of Spain still faces, quote, extremely dangerous, end quote, fire conditions. As summer heat waves become more recurrent, both countries face a daunting task, rebuilding scarred landscapes while preparing for an even more volatile future. If you want to be on top of the most up-to-date analysis on the biggest developments in the world's most important markets, consider subscribing to Market Update, hit the bell notification icon, and you will be. And if you're getting some value from today's episode, don't forget to hit the like button. And finally for today, we move to Asia. Japan's exports posted their sharpest decline since early 2021 in July, another sign of the growing toll of US tariffs on global trade and heightening concerns about the nation's economic outlook. Exports fell 2.6% by value from a year earlier, exceeding economists' forecast of 2.1%, the Ministry of Finance reported today, Wednesday. The downturn was driven by cars, auto parts and steel, sectors heavily exposed to Washington's duties. By contrast, export volumes edged up 1.2%, suggesting that Japanese firms are cutting prices to maintain market share. Once again illustrating that the US argument that many exporters would eat the costs to remain competitive in the United States market is, in some cases, accurate. Imports also fell, dropping 7.5% amid double-digit declines in crude oil, coal, and liquefied natural gas shipments. Still, Japan swung to a trade deficit of 117.5 billion yen, $810 million. The weak trade figures add pressure on policymakers, raising questions over whether Japan's economy can sustain growth. Output has managed to expand for 5 straight quarters despite fragile domestic consumption, but prolonged export weakness could reverse the trend. Quote, car shipments to the United States have started to decline in volume, suggesting that the impact of tariffs is finally starting to show, end quote, said Taro Saito, head of economic research at NLI Research Institute. He noted that US prices for Japanese goods began rising in June and July, eroding competitiveness. Shipments to the United States fell 10.1% last month, with the value of auto and auto parts exports plunging 28.4% and 17.4% respectively. Vehicle volumes dropped 3.2%, once again signaling that car makers are absorbing some tariff costs. Washington imposed a 25% tariff on Japanese cars and auto parts in April, alongside a 10% levy on most other goods. A steel duty was doubled to 50% in June. Automobiles and parts made up about a third of Japan's US-bound exports. Earlier this month, Toyota Motor Corp warned the tariffs could cut $9.5 billion from its earnings. Although a July trade deal lowered the broad-based levy to 15%, implementation remains uncertain. Beyond the US, Japan's shipments to China slid 3.5%, while exports to Europe dropped 3.4%. The yen in July was 8.9% stronger than a year earlier, adding to export headwinds. The trade downturn also complicates the Bank of Japan's policy outlook. Governor Katsuo Ueda has signalled caution ahead of the September 19th meeting, with tariff risks a key factor in the timing of future rate hikes. Quote, the economy will likely contract in the third quarter due to a decline in exports, end quote, the previously mentioned Saito said, adding, quote, it may take quite a while before the fog of tariff uncertainty clears. Okay, that is today's episode of Market Update. Thank you so much, everybody, for watching. There will be no episode tomorrow on Thursday. The next one will be on Friday. Have a good Wednesday, have a good Thursday, and I will see you for another episode on Friday.